Welcome back. As promised, let's talk about the primary markets now. Travel Food Services, 2,000 crore rupee IPO opens a subscription today. This is entirely an OFS. The promoters and the company have raised close to around 599 crore rupees by the anchor investors, and some of the notable names could come up for you on the screen as well. But let's talk about the business in detail as well as the IPO offering. Well, let's understand the business. We have Varun Kapoor, the MD, as well as we have Vikas Kapoor, the Chief Financial Officer, who joins us. Hi, gentlemen. Thanks a lot for joining in and looking forward to interacting with you all more often. Well, let's talk about the financials a little bit first. I'm looking at it over the last few years. Revenue growth has been in the vicinity of the mid-20s on a CAGR basis. And EBITDA margins, could include the rent as well. So I'll stick to the PAT margins. PAT margins have been in the vicinity of around 22% or thereabouts. Right. Do you believe this sort of a momentum can continue?
So thank you, Nigel, for that. And thank you for having us in your studio today. So yes, our business, we focus on travel, QSR and lounges as a business. In aviation, we've built the business over 16 years, and we are today looking forward to accessing the public markets. In terms of our business, the business has grown quite well over the last few years. It has continued actually over the last decade or so, but last few years, you can see that trend very much being there where we've grown strong in the business, and we expect that we're in an industry that's growing quite strongly as well, expected to have a CAGR of about 20% over the next decade or so. And with the, as you could say, the drivers of passenger growth being a key area of growth behind us, the tailwind that actually allows our business to grow consistently forward. In terms of margins as well, we have achieved margins of 21 to 22% levels over the last 2 years.
PAT margins.
PAT margins at our business. We do believe our teams are very focused on driving that. Our teams are very focused on initiatives. Our teams are very focused on driving those robust margins. And those efforts will continue. I mean, just to give a perspective, what drives that as well, our business is investing upfront. Yeah. ROC is a big part of our business. We've achieved about 50% ROCs consistently over the last few years, including the last year, which we disclosed recently in our RHP as well.
Okay, all right. Just one more question before my colleagues come in as well. We talk about the unit economics as well. One big issue over the last few weeks has been what happened with regard to Dreamfolks. And it appears, they were the aggregator with regard to airport business. Right. Could you tell us, is there any kind of risk? Because their call was, the airport operators are putting pressure and various other claims were made. Is there any that sort of risk on your business, or do you think you'll protect it?
So our business, so we are the operators of the lounges.
Yes.
We work closely with our airport partners to create value for consumers, consumer delight. That's by designing, by building, and actually operating these lounges. Where we work with multiple partners, lounge access partners, whether they're airlines, they could be card networks, bank companies, or lounge access programs or loyalty programs like a Dreamfolks would be. Ultimately, the consumers coming to the lounge would come to any of these partners for us. So we are agnostic, and in some sense, what's happening recently where they're actually tying up directly with us tends to be an advantage. Tends to be that customers are directly coming. We can communicate, we can actually create different levels of experience directly with partners as well. So, that's what's, in a sense, occurring today in the industry. So, in a sense, it probably occurs as a positive for the development of the industry.
I just want to also tell our viewers that yours is a very touch-and-feel business, so that to make it easier for people to understand, all the idli.com and the cafecinos that we see at a lot of the big airports, run by, of course, Travel Food Services, TFS. Vikas, just come in on this point on lounges, because that's a very big part of your business. Your current revenue mix is almost evenly split between your own brands and the food courts that you're running with your partners and this lounge business. Just if you could supplement this, if there is disruption and say the lounge business is taken away from Dreamfolk, how does that impact your lounge revenue, if at all?
Thanks for the question. What exactly happens is the lounge business by default is, like Varun mentioned, is supplemented by multiple layers of like airlines, loyalty access programs and multiple. So what tends to happen is, if suppose there is a challenge on one lounge access program per se, typically you would either get the customers directly, or you would get a new access program provider who would be providing that services to you.
Dreamfolks accounts for how much of your overall lounge revenue, which in the last year was around 830 odd crores. How much of that would be from this one lounge service provider?
So from that perspective, yes, they would be sizable portion from that perspective. But the way it is happening is that most of the banks are directly tying up with us to provide the lounge access. So for us, there is no impact.
Those negotiations and that changeover period is already on.
Right.
Yes,
and we work as well, a big part of the business as well as airlines. Airlines has been the part, especially international when you fly, no doubt, that tends to be a big component.
Varun, because great speaking with you, and congratulations on the issue. So for a lot of viewers, a little confusion. Many are asking us online whether you are in the same line of business as Dreamfolks, which you're saying you are not. They are an enabler, an aggregator, whereas you're the operator.
That's right. It's a very different business. They would be one of many lounge access programs we work with. We are the actual players who build the lounges. We actually operate these lounges. We take the real estate, and we have these long-term contracts. So our contracts are about 8 to 9 years. We work closely with airport partners. As they look at upgrading the whole experience at airports, we work very closely with them in that. So we're actually building these lounges.
Right.
Ensuring that the sambar is piping hot every time you
That's
That's what it is. And I'm very particular about my food.
That's great.
But don't get me started on the sambar, because I'll go on about the cost. And of course, online you guys must see, right? People, there'll be the cup of chai which will come up and priced at whatever 800, 700 rupees, and
it's about different experiences.
It's a raging debate out there, right? But on the lounge business, the number of flyers has exploded over the last few years, right? So it's been a different league, in that sense. But access to lounges is also pretty democratized now. So many, it's not that hard in terms of the number of cards which are accepted, etc. How do you earn revenue in the lounge business? One is of course what you sell in the lounge. Right. Is there anything else at all?
And if I can supplement that question, because in between over the last couple of quarters, there was also a phase where banks were pulling back from this business because it was just not profitable, because every card could get you a lounge access. Right. So your thoughts, going back to Prashant's question.
Right. No, exactly, and you see ultimately it's about the consumer experience. You had restaurants and airports. Today I probably say, I think the way airport operators in India have approached airports, I think they made it in some cases better than malls on the high street in terms of the brand mix that you see. And we're focused on delivering that. We're focused on creating those experiences. So both, whether it's travel QSR with some of the brands you see at the airports, and lovely to know idli.com is one of your favorites. So that's a great testament. But in addition to that, lounges as well. Lounges are a place, you're traveling, you have high dwell times. You want a space of comfort. You want a space you can spend some time. It creates an environment or oasis of a cutaway from the rush of moving.
But you're contingent on banks being solid partners and bringing in the footfalls, right?
Completely. So whether it's a bank, whether it's an airline, whether it's a card network, and you're seeing more and more consumers appreciate that. And exactly to your point, and not only that, it's happening globally. India, no doubt. You're seeing that every time. Lounges, many times, are asked as one of the top reasons of we're partnering with whether card companies, banks, because the level of service every year is going up and up. Every lounge coming up.
If a consumer spends 100 rupees at a lounge that's operated by you, how does it split across you, the bank, and others?
So, Prashant, the way it works is we tie up with these access programs, and they pay us per user coming in. So we get paid per use. And I think what's happening as well today is, one is that is a part of the revenue. You have walk-ins as well. But in addition to that, you have people who come to a lounge, and today you see a spa. So, so additional services as well.
The value-added services.
Value-added services. So spa. Today you see, bar in a lounge.
So if you could give, numerically, if you can just sort of disaggregate that number, Varun.
So the larger portion would be the walk-in. The customers who come through the
card programs.
The card programs, the banks, the airlines. For example, international, you'd imagine airlines, business class. You're a first-class traveler. You come to the lounge. You have a separate zone for the first class, separate zone, for business class as well. So that tends to be a large portion of it.
And which business fetches you better margin? The lounge business, where all these tie-ups are vital for that business to thrive, or the regular food court business? Right. Which gives you better margin?
That's a great question. In reality, for us, it's materially both the margins. Ultimately, we're delivering from both of these consumer delight, and margins are quite similar across both businesses, not materially different. And a lot of synergies between both.
Right.
You have central kitchens, central stores, procurement is together. So a lot of these type of comments.
All right, just to wind things up, so you're confident with regard to the revenue growth momentum, profitability can be maintained, return ratios can be maintained, and you don't see any kind of risk like what's happened with regard to Dreamfolks, because your business itself is totally different. Is that fair?
That's fair, Nigel.
All right, we'll let you all go at this time, and all the best for your IPO opening. on listing, we re-invite you all on the channel. And at that point in time, we'll squeeze you a little bit more for some numbers.
We love that. Maybe a few recipes we could discuss.
And I'm a customer both, lounges as well as the other business. So
super.
I can quiz you on everything on the operational front.
And one suggestion, maybe you could introduce a frequent flyer program for idlis and sambar.
Like a loyalty card.
Absolutely. Something like that is going on in the mind. So
Nice.
Thanks, gentlemen. Thanks for coming down.
Thank you.
Thank you.
Thank you.